And we're back after our summer break, ladies and gentlemen. It's 5 o'clock in London. It's midday in New York, midnight in Hong Kong, 2 a.m. in Sydney, 9 a.m. in San Francisco, and 9:30 at night in Mumbai. Greetings, good morning, good afternoon, good evening, depending on where on the world you are today. My name is Patrick L. Young, the IPO-VID Livestream, Series 26, Episode 1. That is in the aggregate number 151 starts here. And well, it's been an incredible summer in the United States of America. And I don't just mean because somebody here managed to go and do some bell ringing, but Kalshi, they've been in the headlines twice recently. They got themselves distributed a DCO, a clearing license, the other week, which went along with their designated contract market license for a future exchange. But of course, the CFTC promptly put a kibosh on it. No political betting here, they said. Well, Megacourt news last week. Kalshi overcomes the CFTC ban on political markets. Might we see transparency yet prevailing where the discredited Benham-era agency has failed over FTX and indeed open markets? Between the US and Japan, an interesting deal. SIBO, which of course remains pretty much the world's most distributed stock market across the world, their Asian presence grows. They've acquired a 14.8% minority ownership stake in Japan Next. And at the same time as SBL are transferring that stake to SIBO are also nosing their way into the US private share trading market, seeking a platform, which is an interesting rationalization, I suppose. Could it be they're trying to break the country club duopoly from the private markets into the public listings business? Meanwhile, also, it has to be said, congratulations to NASDAQ Private Market. They just put out some very bullish numbers on their platform, surpassing $500 million in total volume for transfer and settlement solutions this year. Over in the Dominican Republic, we have lovely news also, education. How do you educate the investors of the Dominican Republic? Well, clearly in Spanish, ladies and gentlemen. So therefore, why would you not turn to the preeminent Spanish language resource, the Instituto BME, who've signed a collaboration agreement with the Dominican Republic Stock Exchange, BVRD. Congratulations to both parties. We look forward to a more elegantly educated investor cadre in the island of Hispaniola. Now, our guest today, that elegantly is actually very, very elegant, ladies and gentlemen, because we're going to be speaking to none other than our returning guest, Bjorn Sibbern. Last time he was here as the supreme commander of NASDAQ in Europe. Nowadays, he's with SIX, the Swiss exchange. The topic of our discussion today is the Swiss paradigm. And of course, as you probably remember, by reading Exchange Invest Naturally, Bjorn joined the executive board at SIX as global head of exchanges earlier this year, responsible for the Swiss and Spanish exchanges, as well as the digital exchange SDX. Bjorn has broad experience managing large teams in the fields of trading, funds, post-trade listings, IPO, data, index businesses, and technology. In other words, everything you need to run an exchange coherently, ladies and gentlemen. And he was EVP and president of European markets as NASDAQ, as I mentioned, leading the NASDAQ markets and exchanges across the Nordic and Baltic regions. Before that, fun fact actually, which I had forgotten, NASDAQ. Before you joined NASDAQ, Bjorn was the CEO at E-Trade Bank Denmark from 2006 to 2008. An interesting starting point. Well, Bjorn, let me ask you, great to see you back. Where in the world are you today?
So thank you. First of all, thanks for having me. I'm joining from a beautiful sunny day here in Zurich.
Oh, nothing nicer than a lovely September sunny day in Zurich. Of course, the irony is that just around this time, we should have been returning from the Bergenstock back in the day when the Swiss Futures and Options Association had 35 odd conferences there on the banks of Lake Lucerne. Alas, that no longer is going. Swiss Exchange, though, is powering on from strength to strength, which we'll get to in a moment. But tell us, really interesting, you've made this fascinating transition. You've gone from being the head of NASDAQ. You're now the head of Swiss exchanges. And actually, we'll talk about this in a moment. You've become a customer of NASDAQ at the same time. What was it like moving to Zurich?
So first of all, the Swiss market, the Swiss exchange is super well structured, super well coordinated. So it's a exchange that works super well. So the transition has actually not been that difficult. Of course, I know the industry. I know many of the customers. And I was also able to say goodbye to NASDAQ in a great way. I've been there 15 years and I have many fantastic colleagues. So joining another exchange, buying technology in some cases from Nasdaq. It has actually on most parameters been a relatively easy journey. It is of course always difficult to leave a company where you've been for so many years, but it has been fantastic to be here and joining the Swiss exchange.
So it must be quite interesting because you went from one group of, I suppose, almost like an exchange that's based around the cantons to another, because, I mean, the whole point of NASDAQ was the way that OM and then NASDAQ have managed to unite the exchanges around and about Scandinavia and also the Baltics. What has it been like transitioning to a headquarters in Zurich and then dealing with the incredible firepower of the regional financial centers of Switzerland?
Yeah, so it's actually very interesting to look at the differences. If we start here in Switzerland, the Swiss capital market is, I feel it's actually the best performing capital market in Europe. We saw it with the IPO we had in Q1 in Switzerland, Galderma. That was the biggest IPO so far in Q1 in the world. We saw that around 30%, 30% of the capital raised came from Switzerland. In such a big IPO, it just shows the strength of the capital market here in Switzerland. And by the way, looking at also on the performance of Galderma, it's now up with 50%, 50 versus the listing. It has been in many ways a super strong, fantastic IPO. And in many ways, also a picture of how strong and well-functioning the Swiss market is. Maybe I just want to touch upon one thing you also mentioned, the Nordic markets, where I was a part of the Nordic markets for almost 15 years at NASDAQ, a very well-functioning market, also very well-structured, but also probably a little bit more tailored toward SMEs. The First North growth story that NASDAQ built based on ideas from the old AIM model has worked super well. So NASDAQ have, especially NASDAQ Sweden, have done fantastic in around SME listings. So where they are a little bit more tilted, Sweden are more tilted to SMEs. Here in Switzerland, we have a fantastic business around big IPOs, but also some smaller, but specific bigger IPOs with the strength of the strong capital market here in Switzerland.
And I think you're absolutely right. I mean, you were guest number 005, so very early in the canon of IPO-VIDs when you were running the NASDAQ business. Gosh, that was all the way back during a thing called COVID. Who remembers that these days? And then I think also, you're absolutely right. I mean, 054 actually episode, we had Erja Retsen, your former colleague, who has done so much to manage to build that SME franchise. And I think in many ways you out-aimed AIM from Sweden and Scandinavia across the NASDAQ franchise there. It's quite incredible. Stunning performance, though, as you say. I mean, you have this mega IPO comes out this year. The Swiss market has no difficulty managing to absorb it. Of course, there were buyers from all over Europe, all over the world. But nonetheless, it's an amazingly powerful network that starts in Zurich, reaches Geneva, Lucerne, Lugano, etc., and then goes all the way across Europe. And the power of the Swiss stock market remains quite sensational.
Yes, it does. And I mentioned Galderma, but it also shows in terms of trading volume we have in Switzerland. I think actually what we spend a lot of time on in the Swiss market is to build a strong liquidity pool in our listed shares. So the mix of local flow, a strong regional flow in Switzerland, a big part of it's also from retail investors coming from the regional banks, international investors, short-term, long-term investors. So building a super strong liquidity pool. And that's also why when you look at market share on the lit venues, the Swiss market is actually one of the best performing markets in terms of market share, simply because the liquidity pool and the liquidity in our shares are so strong. So we are the trading venue to be at if you want to secure best execution for your Swiss shares.
Yeah, I mean, it's quite impressive altogether. And all the more so, I think, because obviously there was somewhat of a kerfuffle in the course of the last year or two, because to see the two largest Swiss banks become one was something that I think a lot of people feared was going to have a significant liquidity impact. And yet here we are now with the unified UBS that's taken over Credit Suisse. And actually the Swiss market is going gangbusters as well as it's ever done in terms of depth, liquidity, etc.
Yeah, I'm not the right one to comment on how UBS and Credit Suisse have done the integration. But looking from media and looking also on the market impact, they have done in many ways a fantastic job. The Swiss market is well functioning. Some customers from Credit Suisse are moving to UBS, but many of the regional banks also do a fantastic job taking the opportunity to onboard some new customers. And we see some of our customers on the regional banks side, cantonal banks, just becoming bigger because simply they take some of the customers and move some of the trading flow from what was old Credit Suisse flow onto regional bank X. That then increase their trading volume with us. So it has, in many ways, actually worked pretty well for us. And also, when I look at the IPO pipeline in Switzerland, we have a pretty strong pipeline when I look at the next 12 months ahead. And a part of that is, of course, in old days, you had always Credit Suisse and UBS competing for the IPO. Now, I think we all know that UBS has a stronger position. But I actually see still a strong momentum in terms of pitching, looking for IPO candidates for the Swiss market, which we are, of course, very happy for.
Yes, you're absolutely right. I mean, I have no idea myself what's going on in terms of the efficacy of the UBS Credit Suisse integration. That's for others to talk about. But it's fabulous to see how it has had no impact, no meaningful impact on the exchange. And certainly, you're quite right. The other banks that can be often very much smaller than, say, the UBS behemoth, I mean, who isn't, have got an incredible depth of investment banking and broking skill, which is really a huge credit to the Swiss market. So you have that in your empire. We'll come back to talking about Switzerland in a second, but also then, and I mean, it seems incredible. We go from, you're talking about Sweden, then we're in Switzerland, and now we go to Spain. I wonder if you've ever thought about dealing with another letter in the alphabet, possibly in your portfolio. But no, I know it's just a facetious remark. Looking at Spain, I mean, you came in, obviously the business had already been bought. That was a deal done by Just Gisselhoff several years ago. Very, very interesting market. Similar, but also quite different to the Swiss exchange.
Yes. So first of all, I really, really like the acquisition Jos did almost 4 years ago. BME is a great match towards the Swiss business. And I should mention, we talked about IPOs. The world's largest IPO so far this year is Butch, listed in Q2 this year in Spain. In Spain, we have had more than 10 listings with us. So far this year, we'll probably get plus 20. So Butch, of course, the biggest IPO so far in the world, but also a handful of mid-size, small-size company, either on our scale-up market or BME growth or our main market. So listing momentum in Spain is, I said it was strong in Switzerland. It is very, very strong in Spain. We end up with probably more than 20 listings so far this year in Spain, and also a very strong pipeline. But we also have to recognize one thing, and let me be upfront and right. When I meet customers, especially international customers, they tell me to trade on the Swiss market, the technology, the way you run it, the way you operate it is one of the best in Europe, if not the best. I get a little bit more mixed views on our technology, the setup. Trading-wise, we have in Spain, we run the Spanish market on a home-built system that works pretty well, but it's also a technology that not all banks and brokers know. What we have announced, and this is very important, we have said we will in 2.5 years' time be on one future common trading platform for both the Spanish and Swiss market. So if you are Morgan Stanley, you connect to our market in Switzerland and you'll get the Spanish market in the same technology setup. So one connection, you get access to both exchanges. That's our vision. We are working towards that. We are looking at what technology solution should we build it on. And hopefully when we have made that decision, then we start the migration of our two exchanges into one common trading platform. So it makes it easier, simpler, more cheap for our customers to connect to both Spain and Switzerland in one connection.
That's going to be a very interesting move when it takes place. And obviously, yes, congratulations on having two sensational IPOs this year. I mean, the two largest IPOs in Europe and the two of the largest and one of the other largest IPOs in the world so far this year, which is quite sensational, demonstrates that not everything gets listed in the USA of major size and growth. And also, very interesting, I think, because both companies listed with quite a reasonable free float, and it was not difficult for the local brokers in Spain and Switzerland to manage to distribute that. Okay, there were investors and buyers all around the world, but it was a remarkable ask to manage to distribute what was a very, very lumpy line of shares, and it was super smooth, or at least so it seemed from the outside.
Yes, it has been super smooth, and also credit to the banks that worked on both the Butch IPO in in Spain, and Galderma in Switzerland. They did a fantastic job in allocating the shares and running the book, both during the IPO and up to the IPO, but also in the post-trading part. I think if you look at Galderma, that is up with 50% after the IPO, it has been a massive success. And what it actually creates, it also creates additional interest for listing in Switzerland. We have a couple of companies outside Switzerland that are, of course, also looking at listing with us in Switzerland. And maybe let me touch upon some of the discussions that are around US versus Europe. For Galderma, we know that the exchanges in US, they also tried to convince Galderma to list in US. Galderma decided to list in Switzerland simply because the liquidity pool, the number of investors, the commitment from local investors, and when the local commitment is there, the global investors are for sure also there. So I actually feel that we have a pretty strong value proposition. I am fully aware of the challenges that you hear about the listings in London, and maybe let me not spend too much time on it. But I think actually both for Spain and Switzerland, our value proposition and the mix between the local flow, the institutional flow, the retail flow from our local investor community, and also flow from institutional investors around the globe makes such a strong liquidity pool. So we have a strong value proposition in terms of listings. So some of the challenges we see in London, we do not feel it to the same extent when it comes to listings.
So also, it must be very interesting because when you woke up this morning, you're in Switzerland, you're in the epicenter of Europe geographically, but you're not in the EU. When you're dealing with your business in Spain, you're obviously at the heart of the European Union amongst the 27 nations. How does that relationship impact you day to day? Because obviously they must have slight diplomatic niceties, let's say.
Yes, and what a great question. And I tried it a little bit at my times at Nasdaq. Iceland was not a part of EU, is not a part of EU. But I think actually one of the benefits with the BME acquisition, when SIX acquired BME, suddenly we became a part of EU, at least for BME. So I think we have a little bit the best of the two worlds in many areas. Sometimes it also makes lives a little bit more difficult that we have one strong foot in Switzerland outside the EU and one strong foot inside EU with BME. And BME is a big part of our business. So I think actually it opened the gates for things we want to do within EU through BME, which is very helpful for our business overall.
Yes, and of course also, I mean, obviously these all predate you, but once upon a time, the Swiss exchange had quite a significant footprint in derivatives due to various reasons. That ended up being sold off. The shareholding in Eurex went to the Deutsche Börse Group, which was the majority shareholder of 80% of Eurex. But obviously Spain is interesting because you have got really a rather strong, essentially local Spanish, but nonetheless a strong local derivatives market that comes as part of that package of the business, which must be very interesting alongside the cash market.
Yes, we have a very, very, very well-functioning derivative market in Spain. If you look at it in the European picture, it is a mid-sized market. It's not a big one. We have a clearinghouse, so we have trading and we have the clearing part on derivatives. So we have the full value proposition. We do it. We offer equities and mainly equities and equity derivatives and index. But of course, what we need to look at is, and that's a part of our strategic review that we're doing right now, should we expand it to other type of asset classes, or should we look at expansion into Europe? So that's a part of our strategic review. I think having a mid-sized clearinghouse, a mid-sized derivative offering, we are happy for that, with that. Mm-hmm. But we also know that we probably need to find ways to grow it going forward, simply because it is a scale game. So we are looking at ways to grow that business, either through new asset classes or also maybe geographically expansion.
Yes, and of course, one of the great advantages, as you mentioned, I mean, you own a clearinghouse and you also happen to own, therefore, a clearinghouse that's naturally denominated in euros, which has got to be very interesting, depending on what takes place in relation to the plans for Capital Markets Union and how the European Union's looking to develop that. Do you find that there's an issue with SIX, good or bad, in relation to being in the Swiss franc?
Right now, if you look at the strength of the Swiss franc and Swiss franc being so stable, I think it's a massive advantage for us with the strong Swiss franc and doing business out of Switzerland. It's a safe harbor. So I think actually that gives us a lot of opportunities. At the same time, of course, also having a BME and Euros business out of Spain adds a nice flavor to our business. So I think actually the mix helps us and gives us a good foundation for growing. And a little bit with Switzerland being a little bit what the safe place, what is works super well. And we do a little bit more innovation and new stuff out of Spain with BME, where we try to be a little bit more nimble and flexible in the way we approach business.
That's really, really interesting, Bjorn. I just want to ask you one question. We're going to go and look at a few books that we've been reviewing that have been books of the week over the summer, so you can get yourself a drink and have a relax for just a few seconds and prepare for the next half of the show. When you look at the opportunity set from above, and I'm not asking you to tell us what those opportunities are, but I'm just curious, do you see a particularly larger opportunity set coming out of Spain and the European Union, or out of Switzerland, or is it roughly balanced?
I think it's roughly balanced, and I think there are quite many opportunities, and many of the two opportunities we are looking at are also global. Patrick, from our previous discussion many years ago, I have a strong passion for the voluntary carbon market. That is, of course, also something that we, from a SIX point of view, are looking at. Is that a new tradable asset class where we need to tap into, meaning that will carbon offsets, carbon removals, will that be a future asset class that you can do futures, that you can do auctions on? We have data products, we have index products. That is one of the areas that we are looking into, and that will both benefit what we do out of Switzerland and what we do out of Spain. You still have companies that want to be carbon neutral, that needs a solution where they can trade carbon removals or buy carbon removals. And you still have companies that actually want to launch the dive products and sell them. And you need an exchange to help matching that. And that could be one of the areas for us to look at in the future.
That's very, very interesting. We're going to come back and talk about that a little bit more. Let me just give you a moment to pause, and I'm going to review a few of the books of the week that we had during the course of the summer. So as you know, in Exchange Invest Weekend, we first list for you every Saturday our book of the week. And here are three of the books that we were running during the month of August when we were on our holidays. First up is Rainer Zitelmann. Rainer, of course, a guest who almost needs no introduction to this show. The Wealth Elite is an absolutely fascinating study of, yes, indeed, the clue is in the title, The Wealthy. It's one of the most interesting books analysing how the wealthy got there and, more importantly, how the wealthy stay there as the elite of wealth across the world. Really, really fascinating. Read that. And also, of course, don't forget to check out the IPO-VID that accompanies the same show, which you can find whatever platform you're watching this on. Just search for IPO-VID and, indeed, The Wealth Elite. That, of course, leads us to the concept of how do we get there? How do we make that money in the first place? One book I shared as a book of the week over the course of the summer is actually my favorite book of technical analysis, Forecasting Financial Markets. It's now in its umpteenth edition. I think it's 10th edition or something like that. I had bought the first edition way back when, I think it must have been the better part of 40 years ago, written by a fabulous man called Tony Plummer. He used to be chief technical analyst at various banks in the UK for his career. It's all about, well, it's subtitled these days, The Psychology of Successful Investing, but it's really explaining a great deal about how you can manage to get under the skin of markets by using alternative methods of analysis, particularly Fibonacci numbers, charts, et al. Fabulous book, Forecasting Financial Markets. I thoroughly recommend it. Great contrast and a lovely compliment to The Wealth Elite. And then indeed, complementing both of those titles, ladies and gentlemen, we have A History of the United States in 5 Crashes. Scott Nations joined us many months ago from NASDAQ, I do believe. When he was there, we were talking about NASDAQ's options products and various other issues on that particular show for IPO-VID. This is, well, essentially exactly what it says in the title. 5 different major stock market meltdowns and how they defined the nation. Everybody's heard about 1929, but how much do you know about, well, 1907, for instance, ladies and gentlemen, a defining moment in the history of the US stock market, yet one that we've largely forgotten about today, along with, say, 1920, which nobody even remembers was a stock market crash, I think, unless you're a mega stock market nerd. So here we come back to our great discussion today, where we're looking at 6, the Swiss paradigm, with our returning guest, Bjorn Sibbern. So Bjorn, you mentioned the VCM, the voluntary carbon market potential. Do you think the potential there is because you've got a lot of interest domestically in Spain and Switzerland? Do you think it's the Swiss brand can be something that can really add quality and quality branding to the voluntary carbon market? What's the competitive advantage you see in that fast-growing area?
So let me maybe start by taking one step back. So please, why do we exist, right? We are here to help companies to grow and create jobs by giving them relatively easy access to capital, right? At the same time, we also create a transparent market where investors, whether it's retail or institutional investors can trade on in a fair and transparent market. So that's why we exist. And if we can expand our model from equities, we've done it in a fantastic way, to ETFs. We are one of the leading ETF exchanges in Europe, to structured products, to fixed income products, but also to new type of asset classes that could need a well-functioning equity market-like structure or commodity market-like structure. It could be carbon, as I mentioned, could also be music rights. It could be quite many things that you could use the exchange concept for going forward. And sometimes you forget about the importance and how well the exchanges work. I'm not talking about only us, I'm talking about many of our industry peers. I read one of your articles around Ticketmaster, and think about how what a painful journey it must be for some buyers of tickets, right? Wait for hours, the price just go higher and higher at the exchanges. And not credit to us, but credit to what exchanges does. You put an offer, you can sit at your home, trade from your mobile phone. Within few seconds or less than a second, you have your order executed as a transparent market where you see the prices, you get data on the execution, you can move on, you can sell it, you can buy, you can continue to trade during the day. It's fair, it's transparent, it's equal for everybody. I think that's a model that I'm proud about. I'm proud about being part of, but I'm also thinking about, can we expand that model into other type of what could be future tradable asset classes, whether it's carbon removals, whether it's music rights, whether it's art pieces. Of course, trading would be a little bit different because you need probably to do it through auctions or different settings. But I think the model with building a market where you have buyers and sellers, you have transparency, you have distribution across the world, that part is, of course, something we want to expand, and that's one of the growth opportunities we have in front of us.
I think that's fascinating. I mean, it's interesting you mentioned the Ticketmaster thing, because yes, I had 2 articles about that in Exchange Invest last week. The Business of Bourses Bulletin Daily, ladies and gentlemen. If you're not already reading it, drop by exchangeinvest.com and sign up. And I thought it was so interesting because I always say that the dominant model of e-commerce is actually the exchange model. I mean, it may not be regulated as Swiss exchange is by FINMA, or it may not be regulated as the Spanish regulators regulate the Spanish exchange, but it's the same thing, whether you're using Uber or you're using Ticketmaster or whatever. Although you look at Ticketmaster, and what a sorry disaster. I mean, it really, really was. This was over the Oasis, Gallagher brothers getting back together again, and people sitting on hold for 5 or 6 hours. And as you say, finding out the tickets then at the end of that process were double the price they were when they logged on. I can only muse at the fact that I think the lowest latency event in any exchange in the world, if that had happened on a regulated exchange, would actually have been the person getting fired who allowed anybody to sit on that sort of a telephone line for 5 or 6 hours, let alone not knowing that the price had moved. I mean, it just seems ridiculous. So it's fascinating. Yes, you're talking about all of these sorts of other interesting instruments that could be there. As a matter of interest, do you have a particular feel? Is Switzerland or Spain more likely to be the platform for innovation, or can it be either?
It can be both. I think in some areas, I think we have an edge in Spain. I think actually we do a super well job around listing SME companies, where we do not have the same momentum on SME listings in Switzerland. In Switzerland, we were the first one to launch what we call Swiss at Mid, which is a midpoint matching. We did that in 2016. I see all our industry peers in Europe copying that model. Many of the bigger exchanges in Europe have actually copied that this year. So part of innovation is sometimes out of Switzerland, part of the innovation is sometimes out of Spain. But maybe let me add one comment on Ticketmaster. So what happened and you mentioned that during the book session, the financial crisis in 2020. So during COVID, where we saw significant drops in share prices through a relatively short period of time, the equity market actually worked super well, right? Investors could get in and out in seconds, spread were tiny. So the equity market, and this is not a credit to SIX or any of the other exchanges, it's actually credit to the whole industry. Liquidity was good. It was easy for investors to get in and out. And we are talking about in one of the financial crisis situation where liquidity was strong. Companies that were listed, they could even get access to capital to survive, strengthen their balance sheet, or even to get access to capital to do acquisition as well. And the reason why I mentioned 2020 is, for me, I was a little bit proud about the whole industry, how well the equity market works across the globe, more or less. When I look back in 2007 or 8, where we had the financial crisis back then, where during Lehman, where we have massive spreads, liquidity was poor. So the market has actually developed, and we saw the strength in 2020 versus what we saw back in 2007 or 2008 in terms of liquidity, in terms of spreads, in terms of how well the market actually functioned. And remember, all exchanges more or less around the globe kept the market open during COVID, and the market just functioned.
I think you make a great point, because actually you compare, okay, the dynamics weren't exactly the same, but you look at COVID 2020, the markets all collapsed, then they turned around and they all went pretty much back up again in almost as fast as they went down. And yet throughout that time, we had almost no issue whatsoever with any market on colossal volume, in volume that was just impossible to believe. You look at, say, 1987, which, okay, that was the most crushing days, declines in percentage terms in 22.6%, if I remember correctly, on the Dow Jones average. But nonetheless, there were all sorts of problems. Hong Kong closed down, didn't reopen for a week, etc., etc. It's amazing how the infrastructure is so robust these days. And I suppose, well, actually, I'm going to move straight into the questions, because we have a great question from somebody who himself tests systems to see that they're hugely robust. Hello, Michael Smith. It's lovely to see your question. Thank you. Good to have this session back to kickstart the post-holiday season. Patrick, you ask all the great questions, so mine has now changed 5 times. Well, I'm glad to hear I'm ahead of you there, Michael. Bjorn, so now you have the Artex exchange operating through your clearing team. Are there any other novel exchanges that you're looking to launch or clear that you can mention?
No, but I think actually Artex is a good example of the innovation we do. It was actually not our idea concept, but we had a a new type of market that wants to use our infrastructure in terms of distributions, in terms of clearing. So I think this just shows that you could put new type of products. It does not always have to be equities or fixed income. It could be art pieces. It could be many other things that you could add to our platform. And I think our job is, and also our growth opportunities, is to look at the infrastructure we have, right? We have an infrastructure where our data distribution is global. We have a global data business. We have a well-functioning market. Can we take that model and add new type of products, services, whether it's arts, whether it's carbon removal certificates, whether it's music rights? That's the type of strategic work we need to do now. I've been here 8 months now, and of course we are looking at, can we find new ways to grow our business by adding new type of what I call asset classes on our existing structure, or with partnerships with firms that have already built the new asset class that we want to add, or could be a mix of partnership, acquisition, something we do ourselves.
Very interesting. I hope you like that answer. Thank you. Great question altogether, Michael Smith. And indeed, Artex, very, very interesting platform. If I remember correctly, is that coming out of Liechtenstein originally? Yes. Is that right? Yes, good. Right. I do remember it. One of many people who've looked at the idea of trying to do fractional art ownership and seem to be, well, they're the closest to gaining traction yet, because certainly they've got a regulated exchange behind them, which is great. We got a second fabulous question coming as well from New York. Hello, Jeff Cutler. Great to see you there. The man who writes the best articles for GARP, the Global Association of Risk Professionals, and was also a previous guest on our show. Greetings, Patrick. Interested to hear how SDX Digital Exchange is doing its market reach, and does it leverage proximity to the Swiss crypto valley?
So what a great question, and I really like it, and it's also getting a little bit back to what we talked about, Patrick, a little bit earlier. So the vision with SGX is to build the future digital infrastructure for Switzerland. And SGX, we have done a fantastic work around, especially with the central bank, with their digital currencies. We have been one of the first mover, if not the first mover in the world. But we have also realized when we look at SGX that for us to be successful, we need to also think outside the Swiss border. So what we are looking at from an SGX point of view, yes, we started in Switzerland. We have many brains around crypto, many brains around digital in Switzerland, but really to get scalability and opportunities, we need to look into EU. We need to look at, can we find ways to expand SGX into Europe, outside Switzerland, so into Europe, and can we find ways also to expand into crypto? And on top of that, we did a joint venture 3-4 years ago in Asia with what we call Asia Next with SBI, where we have a partnership, a joint venture, and Asia Next is one of the leading crypto derivative exchanges in Asia, and they are planning to expand into also spot trading on crypto. So I think actually we started with SGX with the skills, capabilities out of Switzerland that helps us to launch SGX, and also help us to pave the way for what we do in Asia Next with the joint venture we have with SBI and the successful launch of our derivative crypto exchange in Asia, out of Singapore.
Fascinating. There you go, Jeff. That's a pretty comprehensive answer altogether. And in fact, if you want the background to what Bjorn's talking about today, to this whole SDX, go to show number 69 in our repository, where we have Max Butti of the SDX division of SIX talking about this whole exchange and the move into digital assets by the Swiss SIX Exchange Group. Also, I must say, I love the fact that, and I think this is something people don't quite realize as well about SIX as a group is, I mean, you run the Swiss Stock Exchange, but as well, outside of your direct day-to-day business, there are so many arms of SIX in the business of payments and other things around and about. I was fascinated actually the other week to see signing a new agreement that was going to ensure that cash Swiss francs can reach every canton and all corners of the fascinating topography of the Confederation Helvetic. It was intriguing to see the fact that on one side you've got digital currency and you're looking at CBDC. On the other side, you're making sure that the cash is still reaching the people in the hill villages across the nation.
Well spotted, and I'm so happy that you did your homework, Patrick. Yes, we are a business where we did the diversification actually quite many years ago, actually before many of industry peers did it. So we have basically 4 business areas. We have the exchange part that I'm responsible for. Then we have our data business. That is a global business. We have our post-trade services where we have a clearinghouse, we have CSDs, and then we have our payments business that is mainly a Swiss /DACH focused business area. So basically four business areas. So we did the diversification that you see Nasdaq are doing right now, move towards technology. You see Euronext trying to expand their value proposition around exchange and also post-trade. You see LSE with their move into data as well. So I think actually the diversification, we did that quite many years ago, that some of the other exchanges are trying to do right now. But of course, we need to move on. We need to look at our new growth opportunities. We need to find our ways to grow, whether it's on our data business, where we have not only data, we also have a strong index business. Can we find ways to grow that on a global level? What can we do around the 2 strong exchanges we have in Spain and Switzerland? Can we find ways to grow into Europe? We have already done that with something called Quote on Demand, that is for our ETF and now also bond products. So that's a part of what we need to look at going forward, and very important part for us.
Fascinating answer. So let's jump from Switzerland and go right across the other side of the Atlantic, if we may. And I'm fascinated, what's the dynamic you're looking at between the overall state of Europe at this juncture and the USA? I'm quite intrigued as to how you're seeing that developing over time, because obviously at the moment, the US is remarkably dominant. I mean, more dominant than it's been for a long time versus the overall European marketplace.
Yes, so, and sorry, I had to make sure I had my power cable on. So, so the US markets, and of course, being a part of Nasdaq for many years, the US market is fascinating, and you can learn a lot from the US markets. In many ways, they do super well. Said that, as I also mentioned before, the Swiss market works super well. You have, in many ways, a market that works equally good. In some areas, I actually feel it works even better. But of course, liquidity is super strong in US. We have to recognize that. To be a listed company in US, let's face it, it's not an easy journey. So the listing process, being a European company listed in US, is much more difficult versus a listing at the Swiss exchange or at BME. So there are the pros and cons, but sometimes I think actually we sell ourselves a little bit short in how well the exchanges are actually doing across Europe. London is a special case, and let me not comment on that part. Of course, I see the challenge they have with losing listings. But for us and some of our industry peers, I feel that we have a pretty strong value proposition. And let's not forget, if you list in US, you do not perform super well, you get forgotten. Liquidity is not always that great, by the way. So I'm not sure the listing journey towards US is that great for many companies. And what we see is that 99 out of 100 in Switzerland and Spain, they prefer the local listing where they get access to the local flow, the local investor community, which they will not get by listing in US. One thing I want to mention, please. The US equity market is in many ways 1 or 2 years ahead of what you see in Europe. So in terms of development, in terms of new trends, whether it's algo trading, dark pool trading, speed on trading, some of the things that was super hyped years ago. You see those trends from US. So in terms of the equity market model and how it works and future trends, you can learn a lot. You can see a lot in US that then you can learn and copy and take the experience from and implement in the European market. So we have to say, in terms of equity trading innovation, US sticks out. And by the way, many of our customers, whether it's the Citadel or Goldman Sachs or Morgan Stanley, they are also super good at setting high demands on what they expect from us, and sometimes also giving out input on what has worked well in US that we can learn from and we need to focus on when we develop the market at the Swiss exchange or BME or in Europe in general.
That's a very interesting perspective, actually, to put the whole issue closely together, and certainly the danger, the risk that you're not going to be particularly special in the USA and therefore you might lose prominence quite quickly is something that I think a lot of medium-sized IPOs may not appreciate, because they're going to get a lot more nurturing if they're in, say, some of the European markets and so on. There's also, I think I have to say, a sort of a brand issue that seems to be coming through to me, because you've had these two amazing companies come to market this year in Spain and Switzerland. Both of them have been essentially oriented towards beauty products, retail, and so forth, which give them a certain, I don't know, fundamentally European kudos in a way. And certainly, I mean, the likes of Galderma is such a Swiss brand. It seems very appropriate that they should have the Swiss flag on their pots, and they should also have the Swiss flag on the listing exchange.
So I need to correct you a little bit. Galderma is a global company. Of course, they are Swiss-based, but if you look at the brand, the reach, it is actually global.
Yeah.
But you have a point. And I think actually, if I should be a little bit after ourselves, the bragging, the talking about the IPOs we have had here, the two world's largest IPOs so far this year in Spain and Switzerland, we could probably have done a little bit better job about showcasing, bragging about it, where I'm sure if it would have happened in US, they would have probably done a little bit better job in terms of communication and marketing and bragging around it. So that's some of the areas where I feel that we could probably do a little bit better job in being vocal about what actually happened and the strength of our capital markets.
Well, and thank you very much. I didn't in any way wish to say that Galderma was anything other than a global company. I must admit, I take it lazily for granted that all the best Swiss companies are just global. Yeah. I mean, you know, whether you're sitting there looking at that Pilatus PC12 I saw at an airport in the Caribbean 2 weeks ago, or whether it's the big banks or Galderma or many other beauty product companies. I mean, they come from Switzerland, but they're absolutely born global in such a rapid point. But you make a very interesting point. I think there's also, in some ways, a certain degree of an issue, because the US media, which is of course so dominant in the English language world, just take it for granted that the biggest of everything is going to take place in the USA. So we put out a piece of social media this week pointing out to everybody who they've been talking about, you know, $1 trillion companies. They're all tech companies until Berkshire Hathaway. And the truth is, of course, they're not. I mean, 2 of the first 3 $1 trillion companies were actually oil gas companies. PetroChina, that nobody remembers these days, was a $1 trillion company back in the heady days of 2007. But it got no American media almost, because, of course, now when you see, you know, and I'm not trying in any way to deprecate the wonders of NVIDIA and so on. It's interesting because people don't tend to think that the biggest in the world is necessarily going to come from anywhere except the USA or maybe China, rather than coming from somewhere in Europe. So it is somewhat of an uphill struggle to try and promote yourself into that headwind when a lot of people aren't immediately looking for it in Switzerland or Spain or whatever. But great IPOs, I mean, absolutely fabulous IPOs altogether. So when we're looking at, I mean, you talked about a lot of different issues, a lot of parts to your business, Bjorn, and it's obviously very busy and keeping you very excited. What does a sort of a typical work week look like for you? Because obviously you're based in Zurich these days, and then you're presumably spending time in Spain and traveling as well.
Yes, so I probably spend three days a week in Zurich. Sometimes, by the way, also in Geneva. Again, Switzerland is not only Zurich. We have a big part of our trading community coming out of Geneva, but also in some of the other parts of Switzerland. But I obviously spend quite a lot of time in Madrid, where we have the BME exchange, where we have our Spanish headquarters out of Madrid. Also sometimes in Barcelona, where we on the IT side have a super strong team on the IT side within BME. And then, of course, London, a big part of our trading flow, more than 60%, 60 of our trading flow in Switzerland and also in Spain comes from the what we call the remote community. A big part of that is out of London. So the London banks, the high frequency firms out of London, a big part of our customer pool. And of course, we need to spend time with them, understand their needs, understand their demands, and also just working closer with them, whether it's on the trading side, whether it's on the post-trade side, in some cases working with them on around IPOs. So very important customer segment for us, and we spend a lot of time, of course, also with them out of London. And what is important for us is, well, we are, of course, obviously have a strong team in London, where we service not only our customers for the Swiss exchange, but also for our customers on the Spanish exchange side. So basically, you have one touch point towards our customers out of London.
That's very good. And I think that's something that a lot of people don't realize is traditionally what a strong foothold the Swiss exchange has had, particularly in London over the years. And in fact, many occasions where people were surprised because anniversary gala dinners of the Swiss exchange in times past even took place in places like the National Portrait Gallery, if I remember correctly, or the National Gallery in London, because there is such a huge base of business out of the UK, coagulating all of that, as you say, international flow that's coming into Switzerland. So look, I mean, we're coming towards the end of our conversation today. It's been a fascinating tour de table of your interesting empire of the S's, as it were, between Switzerland and Spain, and also looking all the way around the world, the way that SDX, for example, has its deal with Asia Next and so on, and across other markets. I'm curious, though, I mean, Bjorn, from where you sit at the moment, I mean, your exchange is obviously, it's not, at the top of Young's pyramid of exchanges alongside, ICE and CME and all these people are at the top of the second tier where NASDAQ would sit. But you're a very strong second tier player. I mean, you've got global reach essentially for what you do. What's the best way you can prioritize growing that business? Because obviously it's difficult to see all the way to the very, very bottom of the tiniest opportunities, but equally you're quite a long way from the absolute scale of the very largest guys who are mostly driven by a lot of derivatives anyway.
But Patrick, I think you're spot on that question, and that ties closely towards the strategy that we are looking at. Our goal ambition is to be a super strong local champion in Spain and in Switzerland. We are that. We can still do better. But of course, that puts some limitation on our opportunities. From an exchange point of view, I think we have ways to grow into Europe. Could be in new asset classes, could be in what we do today, a quote on demand, which is actually where you can submit quotes, ask for quotes on ETFs or bonds portfolios. I think that's one example of us trying to expand from Switzerland into Europe. SGX is another way of trying to expand from Switzerland into Europe, into the global scene, what we also did with Asia Next. But you're spot on. I think we are not one of the two largest exchanges. We need to find ways to grow and expand. It could be within our existing product setup, product line, but could also be into new asset classes. And of course, you would not see us moving full speed ahead with a trading offering on equities in Asia. I don't think we have a right to win. But of course, we have different areas where we are so strong based out of what we do in Spain and Switzerland that gives us opportunity to grow mainly into Europe. On our data business, it's a global business, and we have great reference data. We have great index business. There we have more global opportunities for us to grow on.
Yes, that's very interesting. We barely touched on market data, and you obviously have a very, very strong data business going back a long time, given the long and illustrious history of both the Spanish exchanges, actually, because of course Spain was a regional series of regional BMOs that are all under the BME umbrella, and also the Swiss exchange itself. And well, I suppose that really just leads me to another chance to answer that classic question that I throw in at the end of these shows. 25 years on, Bjorn Sibbern, where do you think the capital market revolution goes next?
So I don't think we'll see a revolution. I would claim and feel people will for sure challenge me on that one. I think actually it's more an evolution. I think if you look at the equity market, if you look at listings, it works pretty well. If you look at capital raise from listed company, it works pretty well. If you look at equity trading, it works super well during crisis. Investors can get in and out. It's relatively cheap to trade equities. It's not like Ticketmaster, as you have mentioned as well, where you're sitting waiting hours to get your execution done and price go up. So I don't think we'll see a big revolution. It's more like an evolution. Yes, you will see changes like T+1 and maybe going closer to T+0 or T+15 minutes or something like that. You see changes probably around opening hours, longer opening hours for certain products. So I think you will more see evolution than a revolution. But of course, looking back in 20 years' time, maybe I'd be totally wrong. But what I see in front of me now is more evolution versus revolution, simply because the market works super well today.
A market of remarkable efficiency, as we've been discussing, Swiss robustness, lots of uptime, quality products across the board, and great customer service. Something which is very interesting. It is, of course, an achievement to list in the USA, but it can be somewhat of an arduous process. And let's not forget, ladies and gentlemen, two of the biggest IPOs, including the biggest IPO of the year so far, coming out of the Six Empire between Spain and Switzerland, respectively. So thank you very, very much, Bjorn, for being our guest once again. It's really interesting to hear about what is a fascinating tale of capital market evolution. In a way, I couldn't expect anything different from you coming from Switzerland, a place where they just don't seem to do revolutions, but they evolve remarkably proficiently across time. It's been really interesting to get under the hood of the Swiss paradigm and talk about SIX and the Spanish exchange altogether. Really, really appreciate the chat. We look forward to keeping in touch and indeed hearing from you when you've got some other and exciting and interesting news to bring to us. That's our show for today, ladies and gentlemen. Coming next week, we've got the wonderful excitement of, we're going to be looking at the future of exchange matching engine technology with Connemara Technologies. The fabulous duo are going to be joining us, Maureen Downs and Jim Downs, themselves also illustrious traders, brokers in their previous careers before they got into the fabulous world of EP3. That's their product. That'll be IPO-VID 152, same place, same time next week. Now, ladies and gentlemen, we're approaching the 60-minute mark, which therefore means that, well, just like a Swiss clock, we want to be super efficient with how we close out this show. Let me say thank you very, very much once again to Bjorn Sibbern. It's been fabulous to discuss the Swiss paradigm. Terrific to have excellent questions coming in from Michael Smith. Thank you very much, Michael. And thank you very much to Jeff Cutler on the other side of the Atlantic. We'll be back next week with Connemara. In the meantime, of course, drop by Exchange Invest, where you'll hear us discussing all manner of exchanges, even Ticketmaster, let alone the wonders of SIX, SDX, and the Spanish exchange BME. It only remains for me to say thank you very much for our production team today. Thank you, Natalie, Fernando, Desiree, and also indeed Beata for your assistance. My name is Patrick L. Young. I wish you all a great week in life and markets. This has been IPO-VID 151. Thank you, Bjorn, and good night.